Hi, it's Ian from BeAWinningTrader.com, and in this video I just want to demonstrate how I was able to look at the bigger picture on the equity markets using price action to determine what the next immediate trade direction was likely and probably going to be. Now, this has been recorded on the Monday, the 2nd of May. And the trade that I want to demonstrate to you was actually a trade that occurred on Friday. So the last trading day, should I say, of April. But firstly, I want to show what I wrote at the time, or before the event actually, in my daily trading room on the Forex Vox community. So I'm just going to share that with you also, because we all can look after the event and say, yes, we see that this happened, but it's actually being able to read it prior to the event is quite important. But what this also does show, if you watch this video to the end, how being able to read price action accurately can determine great trading signals and determine the next direction, or the next likely direction of the market. So if I just click on to my Forex Vox, and you can see that this was on the 29th of the 4th, if you look here, at 11:22 a.m. in the morning. Equity markets. A fantastic rally yesterday afternoon. Sadly, I missed the big move up as I was out of the office. But the signal on an intraday basis was there, because there was a price action intraday signal there that depicted that move, that rally up to perfection, everyone. Okay? But here's the point that I put up at 11:22 on my daily room when I was analysing the equity markets. However, I have spotted something important to look out for as regards immediate direction. The question is, can there be follow through from yesterday's bullish move? One up day is not good enough. We need to see follow through. As per my related post on the equity markets on this platform 2 mornings past, I said we were trading on the DAX, S&P and NASDAQ inside the previous day's bearish bar range. That was Tuesday's bearish bar range. Interestingly, both the S&P 500 and the NASDAQ have so far been unable to break Tuesday's highs. The DAX has done so this morning. Remember, from a technical perspective, the lows of Tuesday should be broken to the downside before those highs, simply because we had a bearish daily bar on Tuesday. It is quite amazing that with all the bullishness of yesterday, this did not happen. What can I read into this? Well, for sure, I will be watching the highs in these markets on any bullish move that might be made today. If I see weakness underneath them, it might be a great shorting opportunity. In fact, if these highs in either market were not to be broken and the lower highs were to form, it could be the mother of all trades. The mother of all trades. Now, let us go and look what happened. And this is the US 500, which is the S&P market. You can see here that the high on this bearish bar, which was last Tuesday, was a high of 4310.05. Wednesday was inside this bar. Thursday was the big rally up. But significantly, it only went to 4309.80. Oh, the power of price action. Yes. Previous high was 4310. Went to 0980. Went within 25 pips or points. Not even 25 points, I apologize. It went within just over a point, under 2 points of this failing. And then look what happened on Friday. The lower low, the lower high came in, I should say. and that market went right the way down, broke that low, and that low was a low of 41.43. In fact, it made a low of 41.25 on Friday. What a trade. I will show you that now on an intraday basis. I also want to show you the Nasdaq. There was Tuesday's low, a very bearish bar. Why was it bearish? Because the close was closer to the low than the high. Wednesday was inside. The big rally on Thursday, yes, fantastic intraday trade for intraday traders, but it only went to 13,548, whereas Tuesday's high was 13,590. Remember, technically, that high should not have been broken, and indeed it wasn't broken. And again, like the S&P, it made a lower high and the market fell, and it actually didn't break like the S&P did. It didn't break the low, which was 12,809. It went to a low of 12,839, and this is the beginning of trading that began on Sunday night, and today it is made like a double bottom here, but I still believe there's more weakness in this. I think it's still an opportunity for any rally at the minute. Although the equity markets may be oversold, folk, I still think there's an opportunity from which to sell this. So this is just by reading these daily single bars that I was able to make such a statement on my post. There is something that I have spotted, and it could be the mother of all trades. What do I say? Why do I say the mother of all trades? Well, the Dow fell over 900 points, and the Nasdaq fell over 500 points. Yes, the S&P was down 150. So let's look at the intraday charts. The Nasdaq futures. Now, with our price action trading and my methodology, software trading tool, we're never going to get in at the highs or never going to get into lows. We're going to go with the herd. We're going to get the middle ground. So what we did do, we had blue bars here showing strength. That was just after the open, 2:30 p.m. UK time. The US market's open. The market then quickly fell through that support, went immediately into red bars, and then I wanted to see a retracement into those red bars. In other words, the downtrend, it had changed trend when it broke that higher low, broke through that, red bars appeared. Once we get a retracement into those, down into that downtrend with the red bars, we got a sell signal. And that market was just above 13,200. And that market, as you can see, made lows down here at under 12,850. I told you it went to 12,839. So you got out of that there, you got at least 350 points, and that moved down. If we look at the S&P, so this is the power of being able to read the bigger picture and then know what to look out for on the smaller picture. If we go to the S&P, same thing. Broke through the support here. You can see the time, 2:30 open. The market rallied up. The market came down, broke through the support. Then I was waiting the red bars, but I wanted to see where the selling opportunity, where the sellers were, where they're stronger than the buyers. And the only way that I can determine that is if the market starts to rally into this previous uptrend and fails. And of course, with the red bars indicating weakness anyway. So if you wanted to be a little bit more conservative, we got a sell signal in here above 42.20. And the market went to 41.20. 41.23, I think the cash market, and this just blew, this just went under 41.20, over a 100 point move on the S&P 500. So this is just determining price action and the power price action, and being able to then have a software trading tool that helps you by picking out the weakness and strength in the marketplace. I hope you enjoy. Remember, it is beawinningtrader.com. Sign up if you haven't already been on one of our free webinars to see this in greater detail, and for you to be able to see how you can become a member and have the same trading tools and learn the same methodology as I've demonstrated here. I hope you've enjoyed this. Thank you very much.